individuals and companies. So when we are paying tax, we have to account for it, right? So this
mm,
standard deals with how to account for the income taxes that we pay. So in this chapter, you'll have to know few terms like accounting profit. This is net profit or loss before deducting tax expense, which is like PBT, profit before tax. Okay. And then taxable profit or taxable loss. It is the difference between these two are different, right? Our accounting profit and taxable profit will be different, because in tax there will be some tax rules, which is like, for example, the biggest example would be depreciation. For
mm,
in I think in UK and all, depreciation cannot be deducted, right? We in account, while reaching our accounting profit, we will deduct depreciation as an expense, right? So our profit will become lesser because of that. But in taxable profit, what we'll do is we'll add back the depreciation cannot be deducted. So our
mm,
comparatively our taxable profit will be higher, but in some cases it can be lower, it depends. So there's difference between taxable profit and accounting profit, because taxable profit is determined in accordance with the tax rules. Okay. While accounting profit, we follow the standards and all those things. Now, current tax means the amount of income tax payable, or it can be recoverable in respect of taxable profit or tax for a period. For example, if it's a taxable profit, we have to pay. If it's a taxable loss, here they're telling recoverable, but it can be quite complicated, right? We don't have to look at the tax view here, because if it's a
mm,
tax loss, then we can carry forward and all such things are there, but we don't have to look at all those things, because that's UK tax stuff. It's in F6 paper. So yeah, here deferred tax. Now this concept has been introduced because, as I told you, accounting profit and taxable profit will be different, right?
mm,
Because so in order to match this, in order to balance this concept has been introduced. Okay. And deferred tax, there can be deferred tax liability, and there can be deferred tax asset. So deferred tax liability means these are the amounts of income tax payable in future period in respect of taxable temporary differences. Now, these are like terms and all you have to remember. So there will be a difference between the accounting profit and taxable profit. Okay. Now if this difference is taxable, then it can give rise to deferred tax liability. If it's not taxable, then it gives to deferred tax asset. So just we'll don't worry, is we'll just move on just like this. Okay. So this is basically amounts payable. If it's payable, that means it's liability. Yeah. So due to taxable temporary differences, there may be some kind of tax payable in future.
mm,
That is what deferred tax liability means.
mm,
Now, taxable temporary difference is this, basically the difference between these two. Okay. The first case is carrying amount of an asset being greater than the tax base.
mm,
Okay. So in that case, let's say I'll give you an example. Okay. So in our accounts, the carrying amount of an asset is how much? Let's say 30,000. Okay. And the carrying amount of in tax base, it's 20,000. Because there can be difference, right? Tax base basically means how we have reached the carrying amount of that particular thing using the tax rules. Okay, we will
mm,
use tax rules to find the carrying amount, but in the carrying amount of this means we are using our usual accounting thing, and we'll find the carrying amount. So any difference between these two can give to temporary difference. Okay, between the carrying amount of an asset and tax base. Now, if the carrying amount of an asset is greater than the tax base, then it is taxable temporary difference. Okay,
mm.
that means we will have to pay tax on that difference. Okay. In this case, on the difference will be 10,000, right? Because our
Mm.
carrying amount of an asset in our books is greater by $10,000 when compared to tax base. So for that $10,000, we will have to pay tax. In the case of carrying amount of liability, it will be lesser than the tax base. Okay, if it is lesser than the tax base, and on this difference, whatever the amount is, we'll have to pay tax. Okay.
Yeah. Mm,
So this is what taxable temporary difference means. Whatever is the difference between the carrying amount of an asset and carrying amount of liability, you will have to pay tax on it. So this thing, this greater than, or can you see the screen?
Yeah.
Okay, so this box, you have to remember this, because in case of deferred tax asset is like quite the opposite of this. So if they give you
Mm.
something, let's say I'm telling you, in the questions, for example, in the question they asked you, let's say the carrying amount of the asset is 30,000 and the carrying amount in the tax base is 20,000. So is this a deferred tax liability or not? Okay, so in this case, our carrying amount of an asset is greater than tax base. So yeah, this is a deferred tax liability. So we'll show it in the whatever the tax is, we'll show it in the liability section. But let's just say it's the opposite. So in the question, it was given that the carrying amount of an asset was 20,000, and the carrying amount of the tax base was 30,000. So it's the
Mm.
opposite of this. So in this case, it's not deferred tax liability; it's a deferred tax asset. Okay, because it will be not taxable temporary difference, but it will be deductible temporary difference. We'll see that in the future next slides, but I'm just telling you. So you have to remember this formula, because this will help you to recognize what kind of difference is this, and whether it is a deferred tax liability or whether it is a deferred tax asset. Because if it's a deferred tax liability, you will have to show it in the liability section, and if it's a deferred tax asset, you have to show it in the asset section, right? So if you don't know whether it's a liability or an asset, deferred tax asset, your presentation will go wrong, right?
Mm.
You may not be able to balance the statement of financial position. So knowing, identifying whether this is a liability or asset is quite important, and for to understand that, you have to remember these two boxes, yani these two formulas, because so first you have to identify whether it's a taxable temporary difference or a deductible temporary difference. So if it's a taxable temporary difference, the carrying amount of an asset will be greater than tax base, the carrying amount of liability will be lesser than tax base. So here we got our difference was how much? $10,000, right?
Yeah.
So this is our taxable temporary difference in our example. Now
Mm.
moving forward, how to find what amount will we show as deferred tax liability? Okay,
Mm.
that will be deferred taxable temporary difference into tax rate. So what was the taxable temporary difference in our previous example?
10,000.
Yes, 10,000. So let's just say our tax rate was 30 percentage, right? So what will be our deferred tax liability?
3,000.
Yeah, so when we are showing a liability in these statements, we'll show we have a deferred tax liability, we'll show 3,000. Okay,
Yeah.
so first you have to find what taxable or temporary difference, identify whether it's taxable or if it's deductible, then
Mm.
multiply with tax rate. Now here, tax deductible deferred tax asset, all this, the definitions and all, you don't have to by heart or anything like that. This gave for reference and all. So these are like amount of income tax that is recoverable in the future periods. But in case of deferred tax as a liability, it was that we have to be paid in the future periods. But in case of
Mm.
deferred tax assets, like we are going to recover this in the future period. It might be due to the deductible temporary difference or carry forward of unused tax losses. Do you know about this
Mm.
carry forward tax losses and all?
Yeah. Yeah. I am.
So, so you're paying UK tax, right? So you
Mm.
might, you might, so but yeah, but still you don't have trading and also only in that you will have tax losses and stuff like that. Anyway, carry forward unused tax credits and also due to any of these three things, there might arise a temporary difference, deductible temporary difference. So we might receive some kind of tax in the future periods. Okay, so that will
Mm.
constitute deferred tax asset. So in case of deferred tax asset, it is not taxable temporary difference, it is deductible temporary difference. Okay, and
Mm.
this thing is just the opposite of the previous thing. So if you by heart that, then this you don't have to by heart this, right? If you know that, then it is the opposite of in case of if you know about deferred tax asset, no deferred tax
Mm.
liability, then deferred tax asset is
Yeah.
opposite of deferred tax liability, right? So in this
I
case,
got you.
carrying amount of an asset will be lower than tax base. In the other case, it
Mm.
was greater than.
Mm.
Carrying amount of liability will be greater than tax base. In the other case, it was lower than. Okay, so the equation for finding deferred tax asset is just the same. In the deferred tax liability is what taxable temporary difference, but in deferred tax asset is just deductible temporary difference multiplied by
Mm.
tax rate. Okay, okay. Let me give you an example. Now, let's say we have an interest receivable we have some interest receivable, not payable, of $1,000. Okay.
Yeah.
Now this in the related, let's say that the related interest revenue will be taxed on cash basis. Okay, so on tax rule, if you're getting, if so let's say the tax rule it was on cash basis, so if you receive $10,000, then you can show $10,000. Okay, but if you did not
Mm.
receive, then you can't show tax $10,000. But our businesses use accrual basis, right? So if it's something receivable, we'll just show it as $10,000 receivable.
Mm.
Okay, so in our accounts, our asset, there will
Mm.
be $1,000. Okay, because we have something to receive. But in tax, there won't be any such amount. Understood?
Mm. Yeah.
Because they are taxing on cash basis, we haven't received it yet, so there won't be any amount of $1,000 in tax. Did There's a difference, right, of $1,000
Mm.
here?
Yes.
So what's the case here? The carrying amount, and then we have tax base, which is greater than which?
Mm. Equal.
Equal? How come? In our carrying amount of our asset was 1,000. In tax base,
Mm.
it's zero.
Okay.
It's not equal, right? So our
Mm.
carrying amount of our asset was greater than
Is greater
tax
than
base.
tax base. Yeah.
So this will give rise to deferred tax liability. Understood?
Yeah.
Okay. Now let's look at this case, provision. So we have recorded provision, but the provision and all does not attract any kind of tax relief until the entity actually spends the cash, right? Provision is like we
Mm.
are telling, yeah, we have a liability in future, but you did not pay it yet, right? So we're
Yeah.
not going to show
Mm.
it. So tax base, so our provision will be, let's say $1,000 again, $1,000, and on tax base it will be zero.
Mm.
Okay, so here it is a liability, so the carrying amount of liability, and then we have tax base. The carrying amount of liability is greater than the tax base, because in our accounts that we have a liability of 1,000, but in tax paid we don't have any such liability. Okay, so here
Yeah.
the carrying amount of liability greater than tax base, so it gives right to deferred tax asset.
Mm.
Okay, so things work something similar to this. Now, okay, now this part, tax expense in SOPL, this is very 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 important. Okay, in every single FS questions that you do, mostly you will have to find the tax expense. You have to know this thing. You will get an adjustment for tax. Okay,
Okay.
so
Mm.
this standard of income tax is very important, especially this part. Okay,
Mm.
now we have an equation here, just note it down, because we will have to do questions, right? So you need something to refer to. So here, okay, note it down, then we'll just discuss.
Okay. Yeah. That's done.
Okay, done.
Mm.
Okay, so here we have an equation. Here it says current year estimate. Current year estimate basically means the current tax. So what was the
Yeah.
current tax, which is the tax amount of income tax payable in respect for a
Mm.
period, in due to because of a taxable profit for a period, right? So for the current tax, we'll take that amount. We will add or deduct under or over provision. We will go
Mm.
into all these terms, but still I'm just telling you this. If it's under provision, we will have to add that amount. If it's over provision, we will have to deduct that amount. Now then we
Yeah.
have movement in deferred tax.
Mm.
Depending upon whether the amount was positive or negative, you can put the same sign. If it's positive, you just add it. If it's negative, deduct it. So if you do this equation, you will get something called tax expense. Okay,
Mm.
this is the amount that will go to SOPL as
Okay.
a tax expense. Okay,
Mm-hmm.
so you will get a lot of questions on this, and I think almost in every question you will find the adjustment for tax. So the
Mm-hmm.
amount that we should show in SOPL as tax is this amount after doing this equation. Okay,
Mm.
and
Mm.
this current year estimate, you see, this will be given
Mm.
in the question, don't worry. This thing will be directly given in question. So this amount will go to current liability SOFP, because it is what current tax, right? It's a tax that
mm,
we should pay in within 1 year. It's in
mm,
respect of a period. We have to pay it in within 12 months, right? So this current year estimate will be shown in SOFP current liability. All right,
mm.
understood?
Yeah.
Hello.
Yeah. Yeah.
Okay. So um okay, so just note this down where you should show this, because this is important actually. Like where you should
Mm-hmm.
show this and all is quite important. Actually, I can't hear you.
Yeah. Yeah.
Oh, okay, okay.
Okay. I was silent. I don't know
Okay.
why. I was thinking something. Yeah.
Yeah, think, you know, and then when I
Yeah.
ask you in after few slides, I'll ask this, and you will be like, I don't remember. Okay.
Okay. Mm-hmm.
So where does
I
current year estimate go? It goes to current
current
liability in
liability.
SOFP. And
Hmm.
where does this tax expense go?
Statement of profit and loss account. SOPL.
Yeah. Okay, now we have seen some stay, you know, some words like under provision, over provision, and all. Okay,
Hmm.
basically it's this is how we do. Let's say we have estimated in previous year,
Hmm.
our estimate was 100K dollars, so we have given a provision for tax as 100K dollars, but the
G.
amount of current year tax we paid was 120K dollars. So
Hmm.
it was more than we have estimated, right? So
Hmm.
basically the name suggests we have provided an under provision, we have not provided it for appropriately. Yeah, we
Hmm.
have provided less provision for the actual less provision than it was required, right? So there's an
Yeah.
under provision of 20K dollars, right?
Hmm.
So in our in our, if you look at the equation, under provision should be added. Okay,
Yeah.
so here we'll
Hmm.
add 20K dollars. Understood? So
Hmm.
under provision, what will we do? We'll add it in the equation. And now,
Hmm.
whether I told you current year estimate will be given, right? How about under provision and over provision? For that, you will have to look at the trial balance. Okay, in if
Okay.
you're doing
Hmm.
section C questions, they will give you a
Hmm.
trial balance. Okay,
G.
so
Hmm.
if you see a debit balance, you know, if you see the current tax and they given you a debit balance, that means it is under provision.
Okay.
Okay,
Hmm.
this is very important, and if you're doing section A questions, they will. I don't know what happened.
Okay. Hmm.
Okay,
Hmm.
okay, maybe I think it's my network troubles, I don't know. Okay, so
Okay.
what was I
Hmm.
telling? Okay, so if you see a debit balance for current tax, then it is what? Under provision. Okay, so
Yeah.
basically what you should do, you should add two things to remember here. If it's under
Hmm.
provision, you should add it. And if you how to find whether it is under provision, you have to check whether the current tax, okay, whether the current tax has debit balance. If it has debit
Hmm.
balance, then it's under provision, then we'll add it in the equation. Okay, over
Hmm.
provision means it's just the opposite. Yani, in this case we have estimated 120K, but we only paid 100K dollars, so we have
Hmm.
overly given provision for that. So there's a difference of 20K, so we'll deduct that 20K from the equation. We won't add 20K, we'll just deduct minus 20K there. Okay, and
Hmm.
if in the trial balance, it will be what? Credit balance for current tax. So because if the over provision is debit balance, or no, under provision is debit balance, over provision is credit balance. So first you should check whether the current tax has debit or credit balance. Okay,
Hmm.
if it has debit balance, then you will you should understand that it is under provision. So if it's under
Hmm.
provision, you will add whatever is the amount, you will add it to the equation. Now, if it's credit balance for the current tax, then you will know it is over provision. You will deduct that amount from that equation. Understood?
Mm. Mm.
Okay. You have to remember this very clearly because you have a lot of things to remember in this standard while you're doing questions. Now,
Okay.
and then there was a third element, which was movement in deferred tax liability. Okay, so it is basically the current year deferred tax movement to be shown in SOPL. So we
Mm.
might have the the difference between wait, basically this is the difference between how much ever was our opening. We'll check out what's the opening deferred tax liability, and then towards the end of the year there will be some kind of movement, right? So that to find that, we will deduct closing deferred tax liability minus opening deferred tax liability. All of these things will be given in the question. Okay,
Mm-hmm.
you just
Mm.
have to know you just have to identify whether what is this, whether this is closing, whether this is opening, whether this is debit, whether this is credit, under or over,
Mm.
all these things. Okay,
Mm.
most of the, you don't have to find amounts here, you just have to know what it is, what that amount is. Okay, so this closing deferred tax liability, it should not include detail relating to revaluation and the closing total closing will LTC and SOP. Okay, so here's the thing. Let's say I told you, you see that, wait, where is our equation? Okay, this was our equation, right?
G.
So in here you see the third element, what now we are talking about is the movement in deferred tax liability, deferred tax. Okay, so what was the equation? Closing minus opening. Okay,
Mm.
so I told you the opening balance was 20,000, 20K. And
Mm.
in the question they also told you that closing the at the end of the year deferred tax liability was 50,000 K. Okay, this is the closing balance. Now, out of this 50,000 deferred tax liability, let's say 10,000 relates to revaluation.
Mm.
Okay, so in this equation, purely in this equation, when we are putting the value for movement in deferred tax, we won't include this 10K revaluation thing. Okay, so
Mm-hmm.
when we are
Mm.
finding
Makes sense.
movement in deferred tax, the closing balance that we are going to take will exclude any deferred tax liability relating to revaluation. So the closing balance in this example, what will we take for closing balance? Will we take 50,000 or will we take 40,000?
40.
Yeah, because we will not include the effect of revaluation. Understood?
Yeah. Mm.
Okay, do you want me to explain it again?
No, it's fine.
Okay. So closing balance in this equation, the closing balance that we take will not include the revaluation element. So we will take 40K and we will deduct, let's say opening balance was 20K. So we'll deduct 20K and the amount you will get is 20K. So it's a positive amount. So you will add 20K here. Okay.
Mm.
Let's say this is a negative amount. Let's say our opening balance was 60K. So this is going to be a negative amount, right? So if it's a negative amount, we'll just put negative 20 here, so we're going to
Yeah.
minus it. Okay, whatever is the amount,
Mm.
depending on positive, put it up positive here. If it's negative, put it up negative here. Then the next thing that you
Mm.
should remember is when you're finding movement in deferred tax, the closing balance that that you are taking should not include the effect of revaluation. You should deduct that amount. And now about this closing balance, it should go. We told that the where did the current year estimate go? No, where will this current year estimate will go to current year liability, right?
Yeah.
Now the closing balance here will go to non-current liability. Okay, I
Mm.
told you there are like lot of things to remember here. Okay, so in this case, current year estimate will go to current liability. Tax expense will go to SOPL. Now, movement in deferred tax. In the movement of deferred tax, you have a closing balance. That balance will go to NCL. Okay.
Mm. Continue.
Now here's the twist again. When you are
Mm-hmm.
taking this amount to non-current liability, you should take 50,000 and not 40,000.
Okay.
Okay, that's why I
Mm-hmm.
said using 40,000 and not including the revaluation element is purely for this equation. What is this? Okay,
Hmm.
But when you're taking to non-current liability, you should take the total actual amount, the whole amount, 50,000.
Yeah.
All right.
Hmm.
You will become thorough with this concept as you do questions, but still
Hmm.
just remember all these things. That's why I just noted down here. It should not include deferred tax liability relating to revaluation, and the total closing balance is what will go to NCL in SOFP. Okay.
Hmm.
Okay. So okay, let's do this question. How about that?
Yeah.
So we have to calculate the amount which we should show in SOPL, what we should show in revaluation surplus, and what we should show in SOFP, current liability and non-current liability. Okay.
Hmm.
So here we have an accounting year end of 31st December 2020, and 1st January there is a DTL balance of 40K. So what is this DTL balance of 40K here?
Hmm. Deferred tax liability.
What
I forgot. Deferred
we at
provision,
1st
current
January there's
liability.
the deferred tax liability of 40K. So,
The
deferred tax
liability.
liability. This is on 1st Jan.
Hmm.
That's like any
Opening.
at the year beginning. So, what is this amount? So, you have to know what is current. Is it current year estimate? Is it the closing balance? Is it the opening balance? Are they talking about under or over provision? You have to first identify that. Okay. So,
Opening
what will
balance.
be this amount? Opening balance, because here it is talking about the 1st Jan, right? So this DTL is what? Opening balance. So you got the answer, which is opening balance is 40K.
Yeah.
Okay. Now,
Hmm.
second thing is current year estimate is 10K. See, they have directly given you. So current year estimate also, you got the current year estimate.
Hmm.
Now they're telling you the DTL should be increased, which is this thing, the opening balance
Closing.
should be increased to 60K. Okay,
Yeah.
of which 15K relates to property revaluation.
Hmm.
Okay, so what is this 60K?
Closing.
Yes, so the total closing balance is 60K. And the reason they gave you separately that it relates to property revaluation is because they wanted to know that you should not include this in while calculating tax expense in SOPL. All right.
Hmm.
Now, where did that line come from? Okay. Now the next line says there is a current tax liability of 5,000 debit in the trial balance. So what is this 5,000 debit? Don't shake your head. Tell me what is this 5,000 debit?
Current year liability of 5,000. Current year provision.
Current year estimate is they
No,
already give
no.
you. Yeah, it's
Yeah.
something related to provision, but you're mixing things up. It's current year estimate, but it's provision, some kind of provision. We know we looked at two terms there about provision, under or over provision. Remember?
Okay, okay. Yeah, yeah.
So if it's
Under
debit, what
provision.
is this? Yeah, if it's
Under.
debit, it's under provision. Okay.
Hmm.
So now you know it's under provision. So what you should do in the equation: add or deduct?
Add.
Add them. Okay. So now they're telling you calculate the amount to be shown in SOPL. Okay. So when they ask you to, if you want to find the amount shown in SOPL, you need to remember that equation. Okay.
Current year
So the
plus
equation was
under.
current year estimate. If in this case it's under provision, so you have to add under
Add.
provision, and then you have
Exactly.
to find what movement in deferred tax liability. So in current year estimate, 10K.
10,000. Yeah.
What's the provision here? It's 5K,
5,000.
right? Not add up the 5K. Now you have to find movement in deferred tax. So what was the equation for movement in deferred tax here? Closing
Current year
deferred tax
minus
minus
opening. Okay.
opening deferred tax. So my question is, okay, find me the movement in deferred tax.
45 minus 15. 30.
Uh, what's the closing? How much did you take for closing?
40. 45.
Okay, 45. And my opening will be
10. I mean, 15, right?
no.
10. Okay.
This is the opening balance.
Sorry. Yeah. 45 minus 45. Yeah. One
5,000.
minute.
So it's
Hmm.
positive, right?
Hmm.
So five. It's since it's positive, we will add up 5,000. So what will be our tax expense?
20.
20K. So
Hmm.
this amount we will show it in SOPL as an expense. Okay.
Hmm.
Now, about revaluation surplus, they're asking us what will be the amount that will be that we should show in revaluation surplus. We don't have to find anything and all. This is directly given us. They're telling us deferred tax liability relating to revaluation is 15K.
Hmm.
Okay. So the amount that will be shown in revaluation surplus will be 15K. Okay. Now this
Yeah.
15K will be deducted actually.
Hmm.
We will discuss a topic called deferred tax liability relating to revaluation. Don't worry.
Hmm.
So here revaluation surplus will be 15K because they're directly given you detail. Okay. In case of SOFP, so what amount will you show in current liability?
Current year tax. Current year
Yes,
estimate.
how much is it?
10.
Which is 10K.
10.
Non-current liability?
Uh, 60. Hmm.
Yes, 60K. We won't remove any effects of revaluation. Okay.
Hmm.
We'll completely take the whole amount of closing balance. Understood?
Yeah.
Okay.
Hmm.
Okay. Now this is what I was talking about. Detail relating to revaluation. Now let's say um, there's an asset which had a cost of 100K. We have a accumulated depreciation of 20K. So in our accounts it is 80K. Okay.
Hmm.
Now on that date, what did we do? We revalued it to 120K.
Hmm.
So now when we revalue to 120K, at what amount will we start showing that asset?
120.
Yeah. So in our accounts, carrying amount of the asset will be 120K, but in the tax base, it's going to be 80K itself because there is no revaluation concept in tax.
Hmm.
Okay. So now there's a difference, right?
Yeah.
The
Hmm.
carrying amount of the asset is greater than the tax base. What does it give rise to?
Deferred tax liability.
Deferred tax liability. So what's the difference here? What's the taxable temporary difference here?
40.
40K. So if you want to find the deferred tax liability, you have to multiply the taxable temporary difference multiplied by the tax rate. Let's say our tax rate is 30%, so it is going to be 12K. Okay.
Hmm.
Now where you
Yeah.
should show this 12K? Here it is. So in OCI, remember OCI where the
Hmm.
revaluation gain and all will go. So in OCI will have a revaluation gain of 40K, right? So
Hmm.
because we were revalued our asset from 80K to 120K, so we'll have a revaluation gain of 40K. This 40K will be shown in where? OCI, right?
Yeah.
Because any revaluation gain is an unrealized gain, so it will be shown in OCI. Remember that thing,
Hmm.
right? So this revaluation gain will be shown in OCI, and this 12K will also go to OCI. So deferred tax liability relating to revaluation will be 20,000. Basically, it's just like, because the revaluation was there, okay, we have an additional tax to be paid 12,000. If that
Hmm.
revaluation was not there, there wouldn't have been any kind of difference, temporary difference, right? The tax base would have been 80K, our carrying amount would have been 80K, no liability, it's just equal, right? But because revaluation happened, our carrying amount became greater than the tax base. Okay, and then we had to pay that tax for the difference. Okay,
Hmm.
that is what we are showing here because the revaluation gain was there. So out of the revaluation gain of 40,000, we are only ultimately getting 28,000 because 12,000 we are paying tax,
Yeah.
right?
Hmm.
Understood the concept?
Yeah.
Okay, can I move on?
Hmm.
So when you are doing section C questions, if you get any adjustments for this, you should never forget to take this detail relating to revaluation to OCI. Okay,
Hmm.
sometimes you will find the revaluation gain, and then you will know, yeah, there is some kind of difference here. You might find that 12,000 thing, but then what will you do is that you will forget to take it to OCI, because and then you will lose the marks for that. Because if
Hmm.
there's revaluation gain and if they are telling you in the question that there is some kind of difference and all, always remember we have to pay tax for the tax temporary difference that arises due to revaluation. Okay,
Okay.
never
Hmm.
forget to take it to the OCI, which is basically 12,000 amount here. We should always
Hmm.
take it to OCI. Okay, a journal entry for deferred tax liability is debit deferred tax
Excuse
expense.
me.
What?
Sorry?
Nothing. So debit deferred tax expense, and we have to credit deferred tax liability.
Stability.
Uh, okay. This question, Hudson 118. I've taken it from Kaplan. Okay, so they're asking you what is the charge for taxation that will appear in SOPL for the year ended for the year to 30th June 20x4. Okay,
Hmm.
so what are they asking you to find? What amount will go to SOPL, right? So to find the amount that will go to SOPL, you have to apply that equation. Try it, give it a try.
Different festival. The director says stipulated provisions at 15th. Current year.
Okay, what's the current year estimate here?
15.
Okay. Is it under or over provision?
Over.
Yeah, they've directly they told you, right? Over provision.
Hmm.
Okay. And yeah, this thing too. Every time in trial balance, if the amount they give us credit for deferred tax is opening balance. Okay,
Hmm.
remember that.
Opening, closing, current. Right. 23,000.
So, would say closing amount?
30.
No.
21.
So it's no. How come you got 21?
Hmm. Minus tax rate.
I'm just asking you. Okay, this is like the opening balance, and the exceeds the carrying amount of Hudson's non-current assets exceed the tax return down value by 30,000. Okay. So that's the temporary. Oh wait. Taxable temporary difference. Oh, did you do multiply this with this?
Hmm.
Okay, so you got 9,000, right?
Yeah.
So our closing balance is how much? 9k.
21. No.
9k.
Okay. Okay.
Closing balance
21.
is 9k. And our
Hmm.
opening was
12.
12. So you will have what? How much will you get the difference for movement in deferred tax?
3.
Yeah, negative 3,000.
G.
Yeah, closing minus opening, right? So 9k minus 12k, you get negative 3,000. So now you have everything that you need. You have current year estimate, you have under over provision, and you have this movement in deferred tax. Just directly put in the equation. Just 4,000.
12,000.
What that? What? How much did you get? Answer.
12.
No. Wait. What's the current year estimate? 15,000, right?
Yeah.
So it's an over provision. How much is over
Hmm.
provision? 4,000.
3.
Oh,
3,000,
I'm
right?
talking about provision. Under or over provision. You forgot to do take this amount.
Okay.
So it's an over provision.
Mm.
So you have to deduct 4,000, right? Current year estimate minus over provision. And then here it is
Okay.
movement in deferred tax is negative.
Yeah. I need
Okay?
some practice over here. Yeah.
Okay? So
Mm.
it's 8,000
8,000.
answer.
Mm.
Okay,
Okay.
so what did you understand from this question is that deferred taxation shown in trial balance having credit balance is the opening balance. Okay,
G. Mm.
and yeah, this thing, if they given you here, they're telling you carrying amount of non-current assets exceeds tax return done value by 30,000, which is
Mm.
30 carrying amount is greater than the tax written down value, right? The tax base. So we are having a
G.
deferred tax liability, and they given you
Mm.
the temporary difference here directly, 30,000, right?
Mm.
That is carrying amount is greater by 30,000 compared to TDWB. So and then you have the temporary difference. Just find the deferred tax liabilities. Just you have to find what taxable temporary difference multiplied by tax rate, which is 30%. They've given you the difference, which is 30,000 into 30%. You got the closing balance, and then you just found the difference between both those, between opening and closing, and you got the movement. Okay, don't worry, we will do questions based on
Mm.
that. So you get an idea. Okay, so in this case, I have added few pictures and all in this. Just read it, okay? Just go through it. That's the only thing needed. For
Okay.
example, in case of wait, mm, yeah, in case of this development cost, it will be
Mm.
capitalized, amortized. Any development cost, what will we do? If it meets pirate criteria, we will capitalize it, right? But in tax, they will be written down as they'll be written down as an expense. Okay,
Mm.
which is basically this is the thing. Development cost we will cap don't we will capitalize development cost if it meets pirate criteria, right?
Yeah.
Okay, so when we are
Mm.
capitalizing, the carrying amount of our asset will increase, right?
Mm.
Okay, in tax we won't there's nothing like capitalizing development cost all are considered as expense. All
Mm.
right, so our carrying amount will be greater than the tax base because our carrying amount will include development capitalized development cost, but in tax base there won't be any capitalized development cost. So this will give rise to what deferred tax liability.
Mm.
Okay, and now in case of impairment loss, let's just say here we will have a deferred tax asset. For example, let's say we have a carrying amount of 100K. Okay,
Mm.
then we understood that the fair value for the our asset became lower. Our recoverable amount was 80K, so there has been an impairment loss, right? So
Mm.
we will write down our asset. We from now onwards we won't show our asset at 100K because there has been an impairment loss of 20K. So now onwards we are going to show it at 80K. This is the recoverable amount. But in
Mm.
our tax base it is going to be 100K because impairment and all we won't show it in tax base, just like revaluation, just the opposite of revaluation. Revaluation
Mm.
gives rise to what? Deferred tax liability, right? But here it gave rise to deferred tax asset because in this case, carrying amount of in our books is less than the tax base. Okay.
Mm.
Now the concept is kind of similar, and also that's why I'm not gonna go discuss all these things. Just read it. It's not like really necessary. Okay. I'll send you
Okay.
the
Mm.
PDFs, right? So we'll move on to the
Yeah.
question because that's what I'll be focusing on for you to know how to do the tax IAS 12 calculation questions. Okay, because that is the important part.
Mm.
You understood the calculation part. I mean, the only thing is this. Main thing is this equation.
Okay.
Okay,
Current year
okay.
estimate and interest.
So, is there any part that you want me to discuss again, or else we'll move on to doing questions?
Yeah, well, questions. I'll just
Okay.
turn the heater, please. Very cool.
Okay, accounting
Count
for
and combine.
taxation. So we have one, two, three, 4, 5, 6, 7. Okay, so we have 7 questions.
Hmm.
Okay, we'll do all the 7 questions, and okay, I'll let you read it. 134.
What is the amount of income tax recognized in statement of profit and loss account? Current year, okay. And bad balance, it shows a debit balance of 2.1 million and work for product and cash and a credit balance of 5.4 on deferred tax. The tax charge for the current year is estimated by 16.2, and the carrying amount of the net asset is 13 million in excess of the tax base. Income tax rate is 30%. You have to help me.
Okay,
7.1.
so okay, here's the thing. They're given you a debit balance of 2.1 million
Mm,
brought forward on current tax.
mm.
So debit balance on current tax, what is it?
Under provision.
Yes, under provision. Credit
Mm.
balance on current tax would be
Over provision.
yes. Okay, so now you know this is under provision. So we have to add this amount 2.1 million. Telling you credit balance on deferred tax is 5.4 million. What
Mm.
is this amount? Credit balance on deferred tax.
Opening.
Yes, opening balance. So remember, opening balance is like credit balance on deferred tax. Okay. So our
Mm.
opening balance is 5.4 million,
Mm.
and our under provision is how much? 2.1 million.
J.
Okay. Now our current year estimate is 16.2 million.
Mm.
Okay. So our what was our equation? They're asking us what we should show in SOPL. So we got our current year estimate. We'll just write down every value. Okay. We got our current
J.
year estimate. We got our under provision, which is 2.1 million, and now we have to find what movement on deferred tax. So we know the opening balance, we just have to find the closing balance. They're telling you that the carrying amount of net assets are 13 million in excess of the tax base. So what is this 13 million? The carrying amounts of net assets are 13 million in excess of their tax base. So this 13
Closing.
million is what? Is it directly the closing balance? They're
No.
telling you it's the difference between the
Multiplying.
carrying amount and the tax base, right? It's
Mm.
temporary difference. It's a taxable temporary difference, right? So and here they've
Mm.
given you the income tax rate. Find the closing balance.
Yeah.
And then you have
3.9.
opening
Okay.
balance.
Mm.
How much did you get closing balance?
3.9.
Yes, 3.9. So what's the movement?
Opening minus closing, you mean?
Yeah, opening minus no closing minus opening. Always remember closing minus opening. Okay,
Mm. Mm. 1.5.
1.5. Is it positive or negative?
Negative.
Negative. So in our equation, how will you put it? So we have a movement, it's negative 1.5. Just
J.
find the sum. You will find the amount that will go to SOPF.
16.9. 8.
16.8.
Mm. 8.
Yeah, this is the answer. Understood?
Mm.
So I'm just going to repeat it. Debit balance on current tax, it is relating to provision. Anything credit or debit balance relating to the current tax is current, over, under or over provision. Okay.
Mm.
Credit balance on deferred tax is opening balance. and current
mm,
year estimate they will directly give you. And if they're telling carrying amount of net assets is excess of the tax base, that means that amount is just a taxable temporary difference. Okay. And if
mm,
they've given you the deferred tax liability is 13 million, okay, then you don't have to multiply 13 million in 30 percentage,
mm.
because deferred tax liability is what the temporary difference into tax rate, right? So if they've directly given you the deferred tax liability, don't find it. But if in this case they're not given you directly, okay.
Mm.
Okay, let's do the next question. Gradually you will develop,
Jasper Orange. What is the amount of income tax amount recognized in the statement of profit and loss account? Okay. Trial balance, which is a debit balance of 7 lakhs on current eyes. That means opening. Credit balance of 8.4 on deferred tax. The writers have estimated the provision for income tax for the year to be 4.5 million. And the deferred tax provision is 5.6 million. 1.2 million relating to revaluation. And the provision will be 4.5 million. Required deferred tax provision will be 5.6 million. And then 1.2 million is related to deferred tax.
okay. What's the current year estimate here?
Current year
Current year
uh,
estimate
4.5.
4.5. Is it under or over
Yeah.
provision?
Mm, Under.
Under. So it's like 700,000. See, every rest of everything is in millions. So this
J.
700,000 also you take millions. Okay, because the answer
Mm,
itself is in millions. So 700,000 means 0.7 million. So current year estimate you have 4.5, and then you have under provision how much? 0.7. Add it up, because if it's under provision you will add. Now find me the movement or deferred tax. What's the opening balance?
Opening balance 7. For 8.4.
Yes, 8.4. What is the closing balance?
5.6.
5.6, right? Yeah, 5.6 itself is a closing balance. Now, when you're
Mm.
finding movement in deferred tax, there is some kind of adjustments here, because this 5.6 includes what? 1.2
Property
million of
revaluation. Mm,
revaluation, right?
mm.
So when you're finding movement in deferred tax, you should not include that. So find me the movement in revaluation. Sorry, movement in deferred tax.
4 million.
4 million, yes. Negative or positive?
Positive.
Did you do opening minus closing?
Oh, sorry. Closing minus opening. Yeah, negative.
Negative.
J. Mm.
Okay, so what's the sum here? It's
4.8 minus 4.
1.2, right?
Yeah, that is 1.2. Mm.
Okay, 1.2 million. Yeah, that's the answer. 1.2 million. Understood?
Mm.
Okay. 136. They're
What
telling
is
you
the
what is the
provision for deferred
provision
tax?
of deferred tax required. Read this question.
The carrying amount of non-current asset exceeds the current asset by the value of 8 lakh 50 opening. For the year 31st December 2000, the entity claimed the depreciation for tax purpose of 5 lakh and charged the depreciation of 450 to the financial state. Provision current year provision.
Basically, they're asking us the closing balance. Okay,
Hmm.
they're asking us what provision should we give for a deferred tax at year end closing balance. So we've given you opening balance and just few adjustments here. Just add up few amounts here, and then you'll get the closing balance. And multiplied by 30%.
The one I got is not having there.
So the opening taxable temporary difference was how much? 850, right?
850.
So here the entity claimed depreciation for tax purposes 500.
Hmm.
Okay, and wait, okay, and we have already charged a depreciation of 450, but if for tax purposes we need to charge 500 actually. So we have charged less, right? 450.
Add,
So
yeah.
we have to add up what? 50,000 again.
Hmm.
Okay. Now our closing balance, we're talking about a closing balance. Our closing balance will obviously contain what? Revaluation. So there is a revaluation surplus of 250,
G.
right? Add up the 250. Okay. There is a
Okay.
difference due to revaluation. Due to revaluation, there is a temporary difference. So add up all
Hmm.
this amount. How much are you getting? 850.
1150.
Yeah, 1150, right? So this is the taxable temporary difference at the end of the year.
Hmm.
So what is the provision we should give for deferred tax? So deferred tax liability will be taxable
Into
temporary difference into
30%.
tax rate. So into 30%,
345.
345. Okay. Oh, that's the answer. Understood.
Hmm.
Here it's like they've given you a different approach here, right? They're not asking you what you should charge, but instead they are asking you to find the closing deferred tax liability. Okay.
Hmm.
So questions can come in different way. You can expect anything in ACCA. Actually, you just have to be just know the concept. Just here right now. I know, yani, this is the opening. They are asking us closing, so I just have to find the difference. I'm just adding few amounts. That's it. It's not like too
Hmm.
complicated. Here, okay. So they're asking us what amount of tax was paid. It's again a variety question.
Surya?
This here they're not asking us what we should charge and all. They're asking us what amount of tax was paid during the year.
Okay.
Okay, so break down the question. Let's say we have uh it was about
The
30th
tax
December
that is
26.
charged in statement of profit and loss account is the amount of the tax we paid, right?
No. It's like there's a difference between the opening and closing. That's the amount of tax we paid. Yani, there is like we will bring forward something else.
Okay.
Here we
Okay.
will
Add
will
before
bring
tax.
forward, yeah, 140.
I got it. Yeah. 100.
Mm-hmm.
Add, okay. 30, 100. Sorry, 70.
No,
70 भी
wait,
नहीं है.
wait. This, wait, it's like this. This is our previous year, right? This is
Hmm.
our current year. Okay. Previous year, how much did we bring forward? Yani 140 plus 160.
Hmm.
Non-current liability and this current liability. Okay. Because this will be the amount mostly we'll pay. This is like we have to settle within 1 year. So this like out of this, how much did we pay? We want to find how much tax we have paid. So these both amount will come. They will be brought forward on 20x2, like the opening
Hmm.
balance, right?
Hmm.
What's the sum
Hmm.
of this? It's 300, right?
G.
Okay, 300 was brought forward. How much did we charge to SOPL this year?
270.
270. 270 we charged to SOPL.
Hmm.
Okay. Then we have a closing balance, which is sum of these two. How much is it? 440,
4,
right?
440. Yeah.
This one we will move it to the next year.
mm,
We won't settle any amount here. Okay, so
mm,
our closing balance was we brought forward 300. Okay, and then we charged 270 to SOPL, and this 300 is now 440. Okay, so how much amount of tax we paid will be the sum of all these things. 300 plus 270 minus 440.
130.
130 million. Yeah. Okay, so out of the
Mm,
300 brought forward, additional tax expense was there, but the end of the year, it should have been how much? 570, right?
mm,
This year our closing balance should have been 570, but our closing balance is only 440. If you add these two things, you get 570, but
mm.
our closing balance is only 440, so that means we have paid something there, right? Out of 570 we have paid something, that is the amount of 130 million. Understood?
Yeah.
Okay. Do this question. This is our usual thing.
What is the
Amount of
amount of the
income tax
income tax
charged in
charge in
SOPL.
statement of okay. Examples of that. Choose credit balance of 8 lakhs. 19.3.
19.3. There is something extra there. Wait, what's the current year estimate?
Current year.
Current year estimate is
I don't know. Opening 670. Current year estimate is given, right? 1940.
yeah,
Mm,
it's given directly given there.
mm, yeah.
19.4.
Yeah.
Okay, and so is it under or over provision?
Over
How much?
740. 1140.
11.
Mm.
Uh, how did you get 11? They're telling you credit balance on current tax.
8 lakhs.
Yeah, so 0.8 million. Okay.
Mm.
Okay, so you got your current year estimate, you got your over provision. Now you need to find movement on deferred tax, right? So opening balance is how much?
2, 26.
2.6 million.
2.6 million.
2.6. Yeah. And property was revalued during giving. So we have 3.75 property, and this has been included in deferred tax provision of 6.75 million. Basically, this 6.75 million contains 3.75 million. Okay. So we should not include
Mm.
that, right? So we should, out of the 6.75 million, we'll deduct 3.75. So we'll take how much as the closing balance?
3.
3 million. So closing minus opening, 3 minus 2.6. How much you will get? 0.4 million movement. Okay, it's a
Mm.
positive
Mm.
amount. So we'll
Mm.
add it.
Yeah. 19.8, you mean?
Uh, how much was the sum? Yeah, 0.4 million is the movement. Okay.
Yeah. Hmm.
And current year estimate and over provision. How much do you get? Did you add 0.8 million? No,
No,
you deducted it, right?
I'm confused.
Wait. I told you current year estimate. Here it's over provision. Over provision should be added or deducted.
Over provision should be added.
No, over provision should be
Sorry,
deducted.
over provision is deducted. Yeah. Okay.
Okay, over provision
Hmm.
should be deducted. So here we have over provision. So current year estimate is 19.4,
Hmm.
and we have an over provision of how much? 0.8 million. You deducted it. Okay.
19.4
Then
minus
you have movement. Movement, we know that we already found it out,
0.5.
right? We know the opening balance, we know the closing balance. So 6.75 minus 3.75 because we want to remove the effect of revaluation. So 3 million minus 2.6 million, you will get 0.4 million as the movement. It's a positive amount, so we'll add here. Okay, find the sum.
19.
19 million. Okay,
Hmm.
so where
Okay.
did you
I
go wrong?
I have to practice. Oh, I'm just getting confused with this. I mean, it is 8 lakhs, right? It should be
Yeah.
0.8 million. I'm taking directly as 8.
Okay. Be careful with that, okay? Because
Okay.
you have seen here same type, right? They've given you 700,000, but everything
Hmm.
else is in millions.
Hmm.
Okay, so whichever is
Okay.
common, take just convert it. If let's say
Okay.
every amount has been given in seven, mostly just doing it million will you'll be able to reduce lots of zeros. It's easier that way. Okay.
Hmm.
So rest of it understood the how to take current year estimate over or under movement and all of it's okay. The concept is clear how you're going to do the questions.
Yeah.
Okay.
Hmm.
Uh, okay, we'll do this question. What charge or credit for deferred tax should be recorded in SOPL profit or loss? Remember, you see, if you're getting a positive amount for
Hmm.
after doing this, if you get a positive amount, that means it's a tax expense.
Yeah.
Okay, you will have to charge it. Expenses will be charged. That's the word that you use. Charge to SOPL. You know, let's say if it's a negative 90, okay, it's an income
Hmm.
actually.
Hmm.
Okay, basically you are gonna get it. Okay, so that's why they're telling you whether it's charge or credit for deferred tax should be recorded in SOPL. Okay, try this question. Be very careful with zeros, what amounts they're asking, and all those things.
What is the charge or credit for deferred taxation to be recorded? Extra purchase an item of land for 40,000 for September. And this restriction basis. When local tax laws does not allow depreciation as an expense. Expenses cost just claim in the year of the purchase. Charge credit for deferred taxation. I don't think I can do that.
Okay, here it's basically you have to find the deferred tax liability because in this case, it's like you have to find what should be charged to SOPL or credited to SOPL. So in this case, do you see any kind of under provision, over provision, anything like that?
No.
Nothing, right? So just
Hmm.
directly do whatever they're asking. Just try to break it down. Firstly, they're given us the cost, okay, and they're given us estimated useful life, residual value. When you see this amount, the first thing that strikes you is depreciation, right?
7,000.
Okay.
Yeah.
So 7,000. We will charge 7,000 at depreciation, and our carrying amount of the asset at the end there would be how much? 40,000 minus 7,000.
So
That would be
33.
33,000, right?
Hmm. Yeah.
Okay. But they're telling us that our local tax law, they does not allow us to depreciate it as an expense. Okay, what they want us to do is we can give a tax allowance of 60 percentage of the cost of an asset and in the year of purchase, and then we will do reducing balance basis 20 percentage per annum. Basically, in the first year that we purchase, okay, this is the first year. Basically, it is 1st September 2021 to 30th 1st August 2022. So this is our first year. Okay, the depreciation charge that we can do is as per they say. Okay, they're telling
mm,
us that you can charge, you can deduct 60 percentage of this cost on the first year. Okay, and then the rest of year we can do it on a reducing balance basis, yani on a 20 percentage per annum basis. Okay, so if you are going to charge 60 percentage, which is 40,000, 60 percentage is 24,000. Okay, so in the first year we can depreciate it as we can depreciate 24,000. Okay,
mm.
so what will be the carrying amount on the tax base? As per the tax, what will be their carrying amount? They as
16,
following their rules, it will be 16,000.
16. Mm,
So but in our accounts it's 33,000. Under the tax law it is 16,000, carrying amount greater than the tax base. Yeah, it gives
G.
rise to what? Deferred tax
Mm,
liability. You got the deferred tax liability, you know, it gives, you got the temporary difference is what, how much? 17,000.
mm,
Okay, now when you see 17,000, what you will do is directly go and put up 70,000. Okay,
mm.
but you are going to be wrong, because this is the taxable temporary difference, it's not the deferred tax liability. To find the
Okay.
deferred tax liability, what you should do, you should multiply it with what? Tax rate, right? So if you multiply it with tax rate, you will get 5,100. Is it a charge or a credit? Yani in this case, it is a deferred tax liability. So it is what? It's a
Charge.
liability, so it's a charge. 5,100. So here it's it's a different question. Okay, it's not like the normal thing using the equation. It's just that they're asking us what you should charge for a credit for deferred taxation in our SOPL.
Mm,
So here
mm,
we know everything here. We already know these things. Yeah,
mm.
we know how to find the depreciation. The only thing it was here is here, right? So here they're telling us this is the law. They're given us you the law. This is how you should find the tax base. That's why they've given you all the details. Let's say they're asking us to find wait, let's just extend this question. Okay. So I want you to find the deferred taxation for 20x3, 31st August 20x3. Okay. So this is like the second year. I'm talking about the second year, right? So in the second year, the depreciation as per our accounts, it's going to be the same.
33, yeah.
Yeah, no, no, it's a carrying amount, right? Our depreciation is going to be 77,000 itself, right?
Depreciation, yeah. Mm,
Yeah. So what will be the carrying amount on a second year, end of the second year?
26.
Yes, 26,000. Okay.
Mm,
Now
G.
on the tax law, they're telling us that on the year of purchase 60,000, and then we'll have to depreciate is 20 percentage per annum on reducing balance basis. Reducing balance basis means 20 percentage on the carrying amount will be our depreciation. What is our carrying amount? 16,000, right?
12.8, yeah.
So 20 percentage of 16,000 is 3,200 our depreciation. So what will
Yeah.
be our carrying amount on the tax base at the end of
12.8.
second year? Yes,
12.
12.8.
Mm,
Okay. So again, here's the difference. You have to find the
13.2.
difference, and then how much is the difference?
13.2.
13.2. So this is the
Mm,
taxable temporary difference.
mm.
Multiplied with the tax rate, you will get the amount that should be charged to SOPL. Understood?
G.
Okay.
Mm.
Okay. You clear with this question, or do you want
Yeah.
me to explain it again?
No, no, I'm done.
See, this is how you can find this. See, this has been come in. This came on an exam. That's why it's
Hmm.
there in examiner's report. In examiner's report, they discuss the main questions that students face difficulty during that sitting. I think on June 28th sitting, this
Hmm.
question, think students face difficulties. It's like a different question, right?
Hmm.
So obviously, it's not like the normal standard pattern. So they will obviously find difficulty in it. Now, so main thing about doing all the finding out the answer is how to break down a question, right? That is very
Hmm.
important. What they're asking, how to break down, application of your knowledge, all these things are what HCA is testing. Okay. Yeah. Okay. This is our last question. They're asking us what deferred tax asset or liability. Okay, we should find whether it's a deferred tax asset or liability, and we should find out what's the amount.
Purchasing investment on 1st January for 10 million. It has a residual value 2 lakhs. Material plant independent state land basis 1 lakh. Tax allowances is 50% of the amount we spend in the year of purchases and depreciation is not allowed. Tax rate is 30%. Minus 9
Okay, first identify whether it's a deferred tax asset or liability.
asset.
How did you find it's an asset? If you want to
Yes,
find whether it's if you want to find it's a deferred tax asset or liability, you need to find the carrying amount of the tax base, right?
carrying amount and tax. Yeah, okay.
Okay, find the carrying amount for this is like the first year itself. First Jan, 31st December. This is our first year. Find the carrying amount. They've given you every
Nine
detail. They've
nine
given you
million.
cost. Yeah, 9 million.
Hmm.
Okay. Okay. And then how about on tax base?
5 million.
Zeros. Remember zeros.
Tax allowance is 50% of cost of the asset to be claimed in the year of purchase and the requisition is not allowed. Directly 50%, right?
It's not
Into
9 million, yeah. Even you made me wrong. It's not 9 million. Again,
mm,
zeros.
okay.
It is nine, but it's not 9 million.
Oh, I got you now. Oh, 9,90,000.
9,90,000?
I mean 9.9 million.
No.
I'm getting
Yeah.
depreciation of one lakh na.
Yeah.
Hmm. So 10 million minus 1 lakh.
It's 1 million. Wait. Wait. 1 million minus 200 divided by 8. That's like 100,000.
No, that
Okay.
is 10 million, right? Not 1 million. Oh, yalla.
This is 1 million.
Yeah, 10 lakhs is 1 million.
It
Oh,
is
okay,
10
I
lakh.
got you. Hmm.
Okay. So 1 million minus 100,000, 900,000, which is 0.9 million. Okay.
Okay, I got you. Hmm.
Remember the zeros. Okay. Don't get confused with zeros. Okay. You got the carrying
Hmm.
amount. Find the tax base. They're talking about tax allowances. Basically, it's like a depreciation on tax.
Directly into 50%, right?
Yeah, directly into 50%. It will be the depreciation. Yani depreciation 50%. The carrying amount itself will be 50%. So basically,
0.45.
0.45.
Hmm.
0.45 plus 0.45 million. How much will you get?
9.
0.9
Point
million.
9. Yeah.
But your cost is 1 million. Yeah.
Hmm.
you took you took 50 percentage of 0.9 million, right?
Hmm.
This 0.9 million is the carrying amount.
Okay, I have to take it on cost, you mean? I have to take it on
Yes,
1
on
million.
cost. Yes, on
Point
1
5
million.
million.
Yes,
Point 5
point
million.
0.5 million. Okay,
Hmm. Yeah.
understood. Don't get
Yeah.
confused. All right.
Hmm.
Okay, there's a difference here.
Point 4 million.
Point 0.4 million. Tell me, is this a deferred tax asset or whether this is a deferred tax liability? Carrying amount and tax base. Fine. Just look at it. Look at it. Which is
Carrying
greater
amount
than
is
what?
greater than carrying amount.
Carrying amount is greater than tax base. So it gives rise to
Asset.
no
Liability.
deferred tax liability.
Okay.
Carrying amount greater than just by heart that equation. Okay. Any for
Hmm.
deferred tax liability, either one of it. Okay. So carrying
Hmm.
amount greater than tax base is deferred tax liability. Okay.
Okay. Hmm.
Carrying amount of liability less than tax base is deferred tax liability.
Hmm.
Okay. Now, if you remember this, then it's the opposite for asset. So here, carrying amount of our asset is greater than the tax base, so it is a deferred tax liability. So here, it is deferred tax liability. Now you have to find the amount. You found the difference. You know the taxable
Hmm.
temporary difference now. Find
Hmm.
the liability, deferred tax liability.
12,000. 1,20,000.
1,20,000. Okay,
Hmm.
understood.
Yeah.
So this standard, there is like a lot of calculations in this. Okay, the most important part is the that equation, current year estimate, under provision, over provision, movement on deferred
Hmm.
tax. That is like the most important part for
Hmm.
section C. Okay, then just remember the rulings on revaluations a lot. And if you revalue, the revaluation gain will give rise to a taxable temporary difference. You will have a deferred tax liability relating to revaluation. So when you're
Hmm.
finding tax expense that goes to SOPL, you won't include that in revaluation element in closing balance. Okay. But when you're showing the closing balance in SOFP, in non-current liability, you will include that amount. The whole amount will go to SOFP. And the
Hmm.
deferred tax liability relating to revaluation will also be taken into OCI, right? Remember, we got a revaluation of 24,000, and let's say our deferred tax liability relating to revaluation was 12K. So in OCI we will show it like this: revaluation gain, deferred tax rate in revaluation. This is 12,000. So and the total amount will be 12,000. You will definitely show like this separately. You have to show it. Okay, remember those things. You know what, I'll send you the PDF. I think this is enough for today because you just revise this standard. This standard is really important. Okay,
Okay. Hmm.
revise the standards and do these questions again, and if you have any doubts, do text me. Okay, where is this? Okay, so yeah, I'll send you the PDF. Do revise it. You're free today, right?
Hmm. Yeah.
So revise this standard. Okay, I'm telling you, this is really important. Okay, and if you have any doubts regarding any concepts in this, ask me. I'll clear it. All right.
Okay. Hmm.
And yeah, revise the previous standards. Okay,
Okay. I'll do it today.
inshallah. So tomorrow I thought of taking starting some other standards too, but I think it's already 12:30 here.
Hmm.
So
Okay.
it's like we have to learn four standards tomorrow, out of which
Hmm.
three of them are small. One
Hmm.
is not too big, but not like as small as the previous other three. Okay.
Okay.
And then
Hmm.
on day after tomorrow, we have one more standard. And then yeah, maybe I'll start the other thing maybe next week, inshallah. Financial
Hmm.
instruments.
Okay. Hmm.
You have, I mean, if you are not, there's a chapter called financial instruments. Just like tax, it is also really important. Here you remember, you see, you have to remember, this thing goes there, and you have this thing goes to
Hmm.
SOPL, this thing goes to current liability. Just like that, there are a lot of just similar things like that in that chapter, financial instruments. Lot of things to
Okay.
remember. Okay, yes,
Hmm.
because you know as you're moving forward, you are learning how to prepare simple FS. Okay, learning where what to show where. That's what they
Hmm.
are. That's what each standard is going to prepare you for. Okay, so be
Hmm.
thorough with the standards. Revise it daily. Okay.
Hmm.
Yeah, that's it.
Okay,
Okay.
then I'll revise this. We'll see you tomorrow.
Okay.
Hmm.
I will also start FM tomorrow, inshallah. Okay.
Uh, yeah.
So
Okay, I'll
maybe.
talk then.
So it's like 6 o'clock now. I checked that the time is just now 4:30 difference. 4 hour 30 minutes difference.
Yeah, 1 hour has changed.